Be it any field, sports, politics, films or business, it surely helps to have a godfather. Blessing of a godfather gives you a head start. Doors open rather easily. People are willing to listen to you or even give you the first break of your life. But having godfather is not the recipe for success. To be successful, you need to pursue your goal with a great degree of passion, dedication, constant innovation, and above all, a commitment. Having godfather is like a single entry visa. Here I am reminded of the film industry. Numerous producers and well-known film stars have launched their sons and daughters, but not many have made it big. The same holds true in the corporate world. Yet, in all this, there are islands of success stories. Stories of entrepreneurs who have seized opportunities provided by the godfathers with both hands and made it big. The hero of this week's episode is one such shining example. Tarang Jain, founder of Varroc Group, is the nephew of Rahul Bajaj of Bajaj Auto. With the blessing of his maternal uncle, Tarang set up Varroc in 1985 to supply components to Bajaj Auto. Instead of being the sole supplier to Bajaj Auto, Tarang dreamt big. Today, the small unit started in Aurangabad has grown into a $1.2 billion diversified auto component major. Take a look at Varroc's story and you know how to convert the initial push given by a godfather into an eternal movement.
The Indian roads in the 1980s were monopolized by Bajaj scooters. In fact, there was a long waiting period for Bajaj Auto's Chetak. It was being sold at a premium. It was during this time that 24-year-old twin brothers Tarang and Tarang Jain, just out of college, had this burning desire to take advantage of this two-wheeler boom. So they approached their uncle Rahul Bajaj with a business proposal. And Uncle Bajaj readily agreed to support his two nephews. Thus, the brothers began their entrepreneurial journey by setting up an aluminium die casting unit in 1985 to cater exclusively to Bajaj scooters with an investment of 25 lakh rupees. That forced the two hardcore Mumbaikars to shift base to Aurangabad to take advantage of the incentives doled out by the Maharashtra government for backward regions. In 1990, when the brothers saw the advent of plastics, especially as 100cc motorcycles began making their entry and Bajaj too tied up with Kawasaki for motorcycles, they decided to go big and set up Varroc Polymers to manufacture plastic injection molded components. The company recorded revenues of 1.4 crore rupees in its first year of operations. Gradually, the brothers created their own business ventures. While Tarang concentrated on polymers, Tarang concentrated on aluminium die casting. In 2002, the brothers created their own separate business ventures, forming two companies. Tarang stayed with Varroc to concentrate on polymers, while brother Tarang Jain retained the aluminium die casting business, which today is part of the well-known Endurance Group. Today, the Varroc Group is a 5,000 crore rupee company with the most diversified range of auto component products. It has two main companies under the group, Varroc Engineering, which caters to the electrical and metallic components business, and Varroc Polymers, which manufactures polymer-based components. Varroc has 31 plants spread across Asia, Europe and America. How did a company which had posted a turnover of 100 crore rupees in 2000 grow by 50 times to touch the 5,000 crore rupee mark in a span of 12 years? Tarang Jain is candid in admitting that for the first decade, they were content being the sole supplier for Bajaj Auto and did not look beyond it. But seeing huge opportunity, many ancillary units started springing up. Competition began hitting them as there was undercutting, and this began to see Varroc's margins eroding. It was a do-or-die situation, and Tarang Jain realized it was time to rejig his portfolio and think of a long-term strategy for his company. Parallelly, his main customer was also changing their product mix.
And what happened was Bajaj found itself at a strategic point where we went from being a scooter maker to a motorcycle maker. And this transition has taken place over the last 20 years. More specifically, we went from being a maker of relatively cheap scooters to a maker of high performance motorcycles. And what this meant was that we had to really, let's say, reskill our entire back end, our entire supply chain. Strategic shift in Bajaj rendered a lot of our erstwhile scooter suppliers redundant. and we were looking for a new breed of suppliers, with newer ideas, with better technology, with a desire to take with us the risk to become a motorcycle manufacturer and to believe in that. People who had the courage to do it, people who would have the resilience to stay with it, because it was not a goal that was going to be achieved overnight. So we were looking for such suppliers to participate with us in our move to motorcycles, and Tarang was there. I would say he was there at the right place at the right time, and he made the most of that opportunity, and that gave him the opportunity to first participate with us on the polymer business, then on the metallics business, and then on the electricals business.
Besides rejigging its portfolio, the company also began looking at business beyond polymer and beyond Bajaj. Tarang realized that polymer business being in the build-to-print businesses, there was not much value add and margins were low. He ventured into electrical parts, engine valves for two-wheelers and four-wheelers, and metallic forgings. He expanded his client list to include Honda, Suzuki and Yamaha. The key to the future lies in forging alliances with good technical partners, felt Tarang Jain. With this objective in mind, he began touring Japan and Italy, scouting for good technical partners. He made his first acquisition in 2007, acquiring Italy-based IMESPA, a 60 million forgings manufacturer which had Caterpillar as its major clientele. Tarang Jain frankly admits that on hindsight, this acquisition was not a good idea and did not fit in with his vision to concentrate on the auto business. But he continued to test the global waters for a good fish to catch. And he managed a good catch in January 2012. The Varroc Group acquired 80% equity stake in Europe's largest two-wheeler headlights and taillights manufacturer Triumph for around 50 crore rupees. Though a leader, Triumph was a small company of revenues of 14 million euros, around 100 crore rupees. But the idea was to get the technology and to get access to Triumph's South Asian presence.
Looking at Indian market as potentially a fantastic market for the two wheels. Lighting is something with some technology inside, then despite of our small dimension, we can give some added value to a great company as Varroc is today. And together, I believe we can make a very great job in all the growing countries, like as India and as Vietnam. That is the other country in which we are investing.
Even while he was striking the deal with Triumph, well-known investment banker Rothschild approached Tarang with a proposal to bid for US auto component giant Visteon's lighting business, which ranked number 6 in passenger car lighting in the world. That was August 2011. Varroc was confident to make the big move that would propel it into the global stage. Besides, Visteon was of the same size as Varroc, 3,300 crore rupees. Tarang, going by his entrepreneurial gut instinct, bid at the lower side of the bid despite Rothschild advising a higher price as there were too many bidders. His instinct paid off. He won the bid, paying 550 crore rupees for Visteon, which was entirely funded by debt.
Well, the strategy behind acquisition is feeding into this growth strategy. We need technology and we want to diversify products as well as customer base. So our acquisitions are driven by this strategy. We would be looking for targets that would help us acquire the technology to fuel our growth in the two-wheeler space. Now, most of these technologies future technologies happen to be in the four-wheeler space. So that's why I think it won't be a surprise if you see us acquiring a Visteon, which we did, which is entirely a four-wheeler technology.
Two big deals in the last 2 years has transformed Tarang Jain and the Varroc Group. Now he is raring to go, getting more and more ambitious by the day. He is looking at clocking a turnover of 7,000 crore rupees in 2013-2014 and hopes to hit the 20,000 crore rupee mark by 2020. Does that target seem too ambitious? Is it doable? Veena Krishna met up with 51-year-old Tarang Jain to check out what are the strategies he is putting in place to reach this target. Also joining us is Sandeep Uppal of HSBC, who gives us a banking perspective on Varroc strategies.
Welcome back. The story of Tarang Jain, founder of Varroc Group, is indeed a classic story of making it big. Starting out as a small aluminum die casting unit for Bajaj Auto, it has now transformed itself into a global auto component player. Veena Krishna caught up with Tarang Jain at his factory in Aurangabad to find out what magic he performed that saw Varroc Group's turnover grow by 50 times in a span of 12 years. Take a look.
Mr. Jain, Mr. Uppal, thank you for joining us. Okay, Mr. Jain, let me go to the beginning. You and your twin brother Tarang Jain started out an aluminum die casting company in the 1980s to cater exclusively to Bajaj two-wheelers. Then you thought of plastics and polymers. How did polymers give you that head start?
Actually, we started together, my brother and I, we started together in 85, and we started with the aluminum die casting unit in Aurangabad. My brother and I were together in business till 2002. So after die casting, we started the polymer business in 1990, and we also added for the more proprietary products, later on. So we were together, in fact, we kind of only separated in 2002 because the idea was mine to get into plastics, because I saw a lot of a good future, in the material itself because of lightweighting, which is the requirement in cars. So I'm very happy that I could, lay my hands on polymer to start with.
For a long time, you were seen as not taking any risk or expanding. Why is that?
See, in 1990 when we started, the first objective and goal was to kind of really establish ourselves for our main customer, Bajaj Auto. So that was like getting things like, QCD right, getting execution of some of the projects right, following a certain fiscal discipline, So our actually goal was not really to grow with other customers at that point of time. It was to kind of become the number one supplier to Bajaj. And only post 2000, that actually, frankly, we kind of diversified our customer base, and we also diversified also the kind of products we did for the two-wheeler base, also some of the products in the four-wheeler category like engine valves and plastic interiors. We got into that. So the first, you can say that we started growing only after 2000.
Okay. So now to understand really the auto component space, in one of the interviews, your technology head said that we have had enough begging of technology. So what does that imply? Yeah,
actually I think it was a strong word to use. It was just that, traditionally Indian companies have not really invested in technology. And they've always preferred to kind of, go in for, technology tie-ups or joint ventures. And through that route, at least in our experience, we have seen that you don't really get the technology you need in the real sense. So the only way is to actually own your own technology or develop your own technology. But I think that's an old story that, that we had to really kind of strive for getting in technology, because we've been investing now quite aggressively in technology, for in the last 10 years. But that's an old story actually. It's not really the situation today.
Okay, but would you say that was also your core reason for why you went for the acquisition of US auto component Visteon's lighting business?
Oh yes, of course, because even today, a lot of the Indian companies, auto component companies, lack in technology. And one of the major reasons also, besides other reasons, if you want me to state the other reasons, of course, we want to be a global company. We bought Visteon basically for growth reasons, for de-risking from India, because you can't, it's a growth market, but you can't depend only on one market. We de-risk for global talent. We de-risk because, with Visteon, we found that they have low-cost manufacturing facilities. For example, for North America was being serviced by Mexico. Europe was being serviced out of the Czech Republic. I think it was a very kind of an interesting thing, but yes, technology was one of the bigger things, the reasons why we kind of also bought Visteon's exterior lighting business.
So, how do you look at Mr. Jain's strategy, and what is the advice that you would give them to reach this global scale?
See, I think the strategy is right to go to emerging markets low cost, because end of the day, as a manufacturer, you have to be in markets where you are efficient in your cost of production. Secondly, fortunately, emerging markets is also where the growth is coming from. So you're not only producing in a cheaper location, but you're also being closer to the customer. So that really helps, and really from a HSBC perspective, I think it's great to have companies such as theirs, which is going to markets where we have a presence, because then we can help open doors in Mexico, Vietnam, China, Poland, etc. And the way we see with companies such as Varroc would be that how do we assist an Indian multinational to manage at least the finance or the global operations sitting out of Aurangabad. and that would be our objective and how we may wish to work with companies such as Varroc.
Mr. Jain, this overseas domestic ratio, you have 65% business today coming from overseas and 45 from the Indian market. So how is this ratio going to change and how are you going to balance the two?
See, as of now, because we did a large acquisition, the ratio is a little bit more skewed towards the foreign operations, about 60% abroad and 40% in India. Typically, the margins, in the more mature economies, the developed economies, are actually lower. And even today, if you talk about margin point of view, I mean, the Indian market is better, even now. But going forward, see, the developed markets, if I see going forward up to 2020, we laid out a goal, of $4 billion. We don't see that much of growth in our markets abroad. So obviously, we see a faster growth out of India, in India and out of India. Because, I mean, I know there's a blip at the moment, for the last 1 or 2 years, but it's not going to remain for a very long time. I see India bouncing back, in the coming years, So I think that probably by 2020, that's when we set a target, probably it will be more the other way around, 60% India, 40% abroad.
Okay. Mr. Uppal, what would you say differentiates Varroc from its competitors in the auto component space, and how do you also look at this global Indian, markets?
In the Indian auto space, what we can see is that most of the companies really came up starting 80s, and it's a fragmented sector. The key is what separates the men from the boys, because we see a lot of Indian autocom companies in the 1,000-1,200 crore range, but really to develop scale as well as technology, you need to be of a sufficient size. So from that perspective, we like the strategy of Varroc of saying organic growth gets you that so far, but to reach that scale and have access to technology as well as access to OEMs, you need to have inorganic growth to mix it up. Interestingly, while it's been on this journey, it's kind of de-risked itself, because from being dependent on one OEM, it has now got a good mix of OEMs. From being dependent on one segment of auto, which is two-wheelers, it's now got a mix of two and four-wheeler. And from being dependent on one economy, which is India, now it's got a good balance of India and global. So we like that mix. Now, how the mix would change, I would say, would be pretty much dependent on how the Indian economy performs, because the way the auto sector works is, it works on the underlying economy, it will work as a multiple of the GDP, and from an autocom perspective, it is very much dependent on how fast the OEMs grow. So if the Indian economy grows, then obviously the opportunities will be there for this India ratio to go up. But I guess when you get global, it doesn't really make a difference from your perspective, because dollar is dollar wherever it comes from.
Okay, so that's what I also wanted to check with you, that you did the acquisition Vistion is for four-wheeler lighting business, but your concentration is going to be on two-wheelers. How will you blend the two?
See, frankly, the strategies are independent for, the global exterior lighting business, an independent strategy. It's got an independent leadership there, which is very competent, And yes, our core in India is a two-wheeler business, which will continue to be. Like almost 80-85% of business in India is two-wheeler. And still today we see that the penetration levels for two-wheelers are still quite low. And it's a main form of mobility in the country. So we do see a very good growth for us. So in fact, what we are doing is, I see today, frankly, we are probably the most diversified auto component group in the two-wheeler space in India. So, and today, frankly, this whole diversified auto component selection of ours only goes to Bajaj Auto. We are already dealing with a lot of the other two-wheeler players here, Honda, Suzuki, Yamaha, all the other players, but we are still not penetrated with all our products. Plus, we are also not supplying to, probably one or two more of the other two-wheeler players. So, going forward, we want to address this market. We're going to get more aggressive, and probably increasing our market share in the two-wheeler space here. And also, there's an opportunity for exports to these Japanese companies, in Southeast Asia and there are other places where they kind of operate. So I see a very good growth, out of India in the coming years.
Okay, so Mr. Jain, how do you match ambition with managing that ambition? Now you have suddenly become the number 6 global player in the automotive lighting business from being really nowhere in the global space. So how do you manage that change?
See, I think as an entrepreneur, one has to be ambitious, and Varroc also has a vision, to be a $4 billion from a $1.2 billion size. But having said that, I mean, that's more the offense side, that, you've got this vision, which is very important also for the people to know. but at the same time your defenses have to be strong. And that starts firstly with the leadership you employ. I mean, the leadership in your group, which drives the business, has to embody the values. It has to have certain competencies to drive the business, supported by strong structures and systems and impartial policies, the company. So I think that getting, your basic hygiene and motivational factors right in the organization are extremely important. And that's what we also saw. So that I think we have that in India. And we saw the similar thing when in the business we bought last year of the exterior lighting. So therefore, when you have these kind of, good systems in place, good leadership in place, I think your worries are less. So I think that you should have an ambition, but if you want to match your ambition, you must have your defenses, in order.
So Mr. Jain, to become a $4 billion company by 2020 from the current $1.2 billion, how do you plan to reach that target?
See, we have individual strategies, for each of our businesses. In India, we got 3 businesses and we've got these new exterior lighting businesses. So one is that, we have a focused strategy. We have a focused strategy, and I think it'll be important in that strategy that we kind of define the way we want to play, how we're going to win. The kind of customers we choose, the products we choose will actually define our success. But going forward in this 4 billion, we see a larger role of India, a larger role in the two-wheeler space. Because we have this whole diversified components in our stable. So at the moment, I think we supply all these products only to Bajaj. We only supply some of the products to the other two-wheeler manufacturers in India. So we plan to go in for a much more of a penetration with all these customers. We don't supply to a couple of other two-wheeler customers in India. We plan to also start supplying to them. And eventually we also want to actually, or maybe in a shorter time frame, we also want to actually export to a lot of the Japanese plants abroad, largely maybe mostly in Southeast Asia.
Mr. Jain, on that optimistic note, thank you very much for joining us. Mr. Uppal, thank you for joining us.
Thank you very much.
Well, that was Tarang Jain talking about his winning strokes. These are the mantras he implemented to build Varroc. Stick to knitting, technological upgradation step by step, growth by acquisition for scale and technology, offering the most diversified range of products, adopting de-risking model. Varroc has the right mix of domestic and global business. Very focused man, I would say, is Tarang Jain. Piggybacking on Bajaj Auto, he created his own brand in the auto component industry. And I'm sure his uncle Rahul Bajaj must be feeling very proud that he backed the right horse. Well, on that note, it is time to say goodbye. See you next week with another interesting episode. Till then, keep watching CNBC TV18.